Traders, welcome to this week's analysis and update from the 19th of April 2021 to the 23rd of April 2021. This week we'll be covering the Euro USD, the British Pound USD, USD Japanese Yen, Australian Dollar USD, New Zealand Dollar USD, gold, crude oil, and SPI 200 cash. As always, a quick disclaimer: today's analysis is for educational purposes only. All views and information is of my own opinion and should not be taken as investment advice. Forex is a high risk, high reward business, and you should never trade with money you cannot afford to lose. That being said, traders, let's get into this week's analysis. Traders, we'll start off with the Euro USD. Technically, this pair is still in a downtrend, so the bias remains bearish on this pair for now. We can see last week price printed this inside bar structure here, mother bar, bullish pin bar, first inside bar, second inside bar, which was the catalyst for the continuation of this correctional move. We can see to close out the trading week that price has created this inside bar structure once again after meeting resistance at 199 area here, all through here, and of course bouncing off previous swing support here at 19522. So in moving forward, traders, we're going to stay on the sidelines for now, simply because you could see that the 8 and 21 EMAs have crossed over and they are diverging, if you will, or widening. So we won't be taking a short entry at this stage. First of all, we don't have a signal in the first place. And of course, to enter short, traders will be looking for a confirmed break of the mother bar here below, obviously, this previous support on the daily time frame. And we would look to retarget initially 18334 swing support, short-term swing support, and then further down to 17040 support, and then continuing further. As I mentioned previously, my bias is bearish, and I do believe that price has a long way to go below 17040, but not before some pullbacks, obviously. So for now, traders, price has found resistance at this resistance area here. We won't be taking any entries. Of course, traders, should we get a false break to the upside over the course of this week, so let's just say the next candle or next couple of candles could be a false break to the upside, that would give us a bearish sucker setup. If in fact it was an inside bar sucker setup, of course, then that would be our trigger to go short. Or conversely, traders, we may very well get a bullish sucker setup in the context of this structure here. Then of course that would nullify our short position or our short bias on this pair. And if we get a close above this resistance area here, traders, on the daily time frame, we'll look at it then, of course, and we may change our bias to a short-term bullish opportunity. But that, of course, is yet to play out. But the overall bias is bearish. There's nothing to do because we have this structure here just above support and bouncing off resistance. We'll wait for a close below this previous support in the form of a bearish sucker setup, or bearish pin bar would be nice. Or conversely, once again, if we get a false break to the downside of the mother bar and a confirmed close above, on the daily time frame above this resistance, and then that may very well turn our bias into a bullish bias in the short term. But of course, we'll monitor that as it goes. So nothing to do on this pair, traders. We'll just see how price trades out over the course of the trading week to allow us to make a decision on this pair. Thank you. Traders, here we have the British Pound US dollar. On Monday, when the market opens up, I'm going to be placing a long entry on this pair. So I'm just giving this to you now so you can prepare for when the market opens on Monday. But traders, you can see here we have key support. I've mentioned this before in my analysis. Key support here. We're in a clear uptrend at 136695. We could see last week that after this correctional move to the downside, price has once again found support at this key event area. Last week we had this inside bar structure form just here. We didn't trade on this inside bar structure, traders, because it had formed just under this previous resistance area through here, traders. if you were to put a horizontal line there, you can see that price hadn't closed above this resistance. So that would mean we were, excuse me, potentially buying into immediate overhead resistance. So I wanted to make sure, wait for price to close above this support event area here, key support for us, 137781. Again, I've made a reference to this area. Well, we can see as of the close of last week's trading session, we have this beautiful looking bullish sucker setup just here, where we have the mother bar, the inside bar, and then we have the bullish pin bar, which was a false break to the downside after breaking past the low of the mother bar, and then of course reversed in the other direction. So this is a key signal for us traders. It's a very well formed bullish sucker setup in line with the dominant overall trend after a pullback back into previous support. So we have all the evidence to suggest we want to be taking a long trade on this pair, traders. The setup itself, come Monday morning, I'll put the setup in the market. I've placed a buy limit. Well, I will place a buy limit at 138083. That's just at the high of the mother bar here, traders, the mother candle. My stop loss 137110, just 5 pips below the low of the breakout candle. This is the safest stop loss to strategy to use when trading a sucker setup. So I want my stop loss just below the low of the breakout candle, in this case the bullish pin bar, and our take profit logical, our first take profit target, will be up here at overhead resistance at 14008. Traders, this will give us a 1:2.06 risk to reward. Our stop loss is 93 pips. Our take profit is 192 pips, traders. So it's really just a matter of whether we get triggered or not, whether we get a slight pullback to the high of the mother bar and get us in the market. But it is a very, very good looking bullish sucker setup we have in our hands, in line with the trend. And of course, we have a clear break and close above significant support. So we now have the momentum on our side. So traders, that's what I'm going to do Monday morning. So of course, I'll let you know whether we're in the market, but I will be putting this entry in the market come the open on Monday. Thank you, traders. Hi, traders. Just a very quick update on our USD Japanese yen trade that we entered in on Friday. You all would have had an opportunity, a second chance opportunity to get your sell limit orders triggered. I got my sell limit triggered here through this candle. On Friday, you would have had the opportunity through this bearish pin bar here to get your sell limits triggered if you kept your sell limit orders in the market. The high of this bullish candle here, traders, this bearish pin bar candle here, was 108.964. Our entry was 108.951. So you should all be in the market by now with this pair. Currently, we're just running around 14 pips at the close of the trading week last week. You can see here, to close out the week, we have another inside bar structure form after this bullish, beg my pardon, traders, this bearish pin bar formed inside the trade action zone between the two moving averages, acting as dynamic resistance for us. Once again, we have the inside bar form as a continuation signal at the EMAs, again acting as dynamic resistance. So the point is, traders, you should all be in the market by now. If you kept your sell limits in the market, there's no reason to not keep them in the market. I did make mention of that. I said we could get a retrace back into the 50% of this bearish pin bar here that we entered on. So anyway, traders, if you are in the market, good on you, and we'll just see how it plays out over the course of this week. Thanks, traders. Trades, here we have the Aussie dollar, US dollar. Just an update on this pair. Obviously, we have long positions on this pair. You can see now at the end of the trading week, the price closed out about 68 pips in profit for us after breaking through this bullish sucker setup just here. A clear break, aggressive break of the mother bar. We're now again sitting at 68 pips in profit. We can see here price is bouncing off previous resistance here, as I've mentioned previously, at 77563 local resistance. You can see to close out the trading week, price has printed this inside bar structure again, and as a continuation signal. So we'll just see, traders, whether over the course of Monday or Tuesday, whether we get a close on the daily time frame above this local resistance, where this inside bar continues to act as a continuation signal, or in fact a reverse signal at an event area, which they sometimes do, of course. But for now, traders, it looks good for us. If we get a close above 77563 local resistance, which I do believe we will, traders, then that opens up, that exposes our take profit target, obviously at 78370. So traders, nothing to do here, obviously, but for now it's looking good for us. The fact that we do have an inside bar structure form to close out the trading week is good. And just to repeat myself, if this short-term local resistance capitulates, we get a close above here on the daily, then there's nothing in our way to reaching our take profit target. But for now, traders, nothing to do. We'll just see how it plays out over the course of this upcoming trading week. Next up, traders, we have the New Zealand US dollar. Very, very similar structure to its counterpart, the Australian dollar. You can see last week, as I've made previous mention in an update, we had this bullish sucker setup form here at key support 70067 area. Of course, that was the catalyst for this very dominant move to the upside, which of course got us into profit territory from taking our entry based upon this inside bar bullish pin bar structure. Since then, traders, it's very obvious, price has closed above key support. This is a key event area, traders, 70152. And then to finish out the trading week last week, printed, again, similar to the Aussie US dollar, printed this inside bar structure just below local resistance here at 71877 in the form of these two bearish pin bars, previous support, localized resistance. So moving forward, traders, over the course of the next couple of trading days, if we get a close above here, it's very obvious, 71877, that exposes our take profit target of 72644. There's nothing in our way. We just have to have this hurdle here cleared, which I believe we will. There's nothing to suggest we won't at this point. So nothing to do, trades. Looking all good for us. We're sitting around 105 pips in profit to close out the trading week last week. So it's working out beautifully for us. I'm not doing anything. I'm not going to touch this. We'll just wait and see how it plays out. I'll keep an eye around the 71877 area here, traders. But just to confirm, if we get a close above here on the daily time frame, that exposes our take profit target. Should we get a sell signal here, traders, so let's say in the form of a bearish pin bar form after this inside bar structure, well, then that would be a bearish sucker setup, and we may look to manage the trade at that stage, but of course that's all speculation. But for now, traders, there's nothing to do. It's working out fine. We'll just see how it plays out over the course of this upcoming trading week. Thank you, traders. Traders, here we have gold. The overall bias in the long term bearish on gold, but I do have a short-term bullish bias, which I'll explain in a moment. We can see here, traders, after reaching support here at this double bottom pattern at 167709, this second pattern here, traders, resulted in a huge bullish pin bar on the weekly time frame. If you go to your weekly time frame, you'll see that. But on the daily trades, we had this double bottom pattern here. We can see, I made mention that if price breaks out of the neckline of this double bottom pattern through here at 175549, that would be a confirmation that we want to, in the short term, be on the long side of gold. We can see last week price printed this inside bar structure here just below previous resistance at 1746. Resistance through here, resistance here, false break to the upside, price came back down and again bounced off this resistance area and created this inside bar structure. This would have sucked a lot of traders into taking a short entry on gold, simply because it was previous resistance. As you can see through here, we had a false break to the upside. As soon as it broke up, it came back down again and then printed this inside bar just below previous resistance. A lot of traders would have went short just to be sucked in. This was the market taking out the shorts. Of course, since then, of course, this inside bar structure here, in fact, acted as a continuation of the short-term uptrend as opposed to a continuation of the downtrend through this aggressive candle here. This candle here clearly has broken out through, as I mentioned before, double bottom neckline here, resistance at 175549, and then found resistance once again at previous support, turn resistance, support. This is long-term support. If you zoom out of your charts, traders, there's 176417 area. I've mentioned that before. Turned into resistance through the breakthrough here, the breakout of resistance, and then acting as short-term resistance on this daily candle here. Then the next day, of course, we have a clear close above this key support area. So what does that mean? And of course, we have overhead resistance at 1816. So moving forward, traders, I'll be on the lookout for a price action buy signal above 176417 long-term support. So again, zoom out and you'll clearly see that this has been a long-term support area for gold. We're looking to take advantage of this clear break of this support area, a breakout of the support area, and we're going to target 1816 resistance in the short term, and then potentially we'll look for a price action sell signal to sell off from 1816. I do expect the sellers to come back in the market at 1816, traders. So we're going to take both sides of this market should in fact we get an opportunity over this week to take a long position. So nothing to do, of course, but traders, as soon as I see a price action buy signal either on the 4-hourly or the daily, above 1764 area here. Now that could be an inside bar. It could be one of the three signals, traders. It could be an inside bar, it could be a bullish sucker setup, or it could just go on for a couple of days and then print a reverse bullish pin bar. Either or, traders, we're looking to take a long position, as I mentioned, targeting 1816. So of course, traders, I'll let you know when that happens, but I do have a short-term bullish bias in the targeting 1816, and then, as I said before, expect the sellers to come back in the market and push prices back down in the direction of the long-term trend. Thank you, traders. Traders, here we have crude oil. Our bias remains bullish on crude oil, so we are still looking to take a long entry at some point once this calms down a little bit, if you will. You can see here, traders, I mentioned before, all this area through here, we had multiple conflicting signals. We had inside bars, we had a bearish pin bar, followed by a bullish pin bar, more inside bars, indecision candle just here. So we didn't want to be a part of any of this, traders. But in moving forward, this inside bar structure here remains intact, where we have the mother bar and multiple inside bars. So this still remains intact, meaning this 57262, 59160 support event areas are key for us. And as long as price stays above these areas, traders, our bias is bullish indeed. We couldn't trade this inside bar structure here, traders, simply because the mother bar here is just too big. So we didn't want to be a part of all that. Since then, of course, we've had other inside bar structures form. We have one here. We have another inside bar structure form just here, just above 59160 support. Then, of course, we had the breakout candle, which has broken out and closed above short-term resistance, previous resistance here, swing point resistance here at 62230. And then, of course, to close out the trading week, we see price once again testing and bouncing off previous resistance through here at 63730. We have resistance up here at 66220, and of course resistance at 67840. So on moving forward, traders, there's nothing for us to do yet. We are looking for one of two things to happen. We are looking for a pullback back into this area somewhere around here, and we want a definite buy signal in the form of a bullish reverse pin bar would be lovely. But whatever the case, we are looking for a price action buy signal in the best case scenario back into these support zones down here, traders. Failing that, we are looking for potentially a price action buy signal just above this resistance on the daily to allow us to target 66220. So we may not get a pullback, considering we've had this pullback and now we've broken out through this dominant candle here of previous resistance. So we may not get another pullback in the short term. That's okay by us. If we get a continuation signal above this resistance on a close on the daily time frame, not the 4 hourly, it would have to be the daily, then we'd take a long position retargeting 66220. But of course, right now, traders, there is nothing to do until we get clear direction and let price tell us what we should be doing. So of course, I'll keep you abreast of the situation as it unfolds. But in the long-term trades, we are looking to take a long entry. It's just given the opportunity at a key event area to do so, and I'll let you know when that happens in due course. Thank you, traders. Traders, just an update on our SPI 200 cash trade. We could see since entering the market on the 14th, we are now 74 pips in profit as of the close of market on Friday. Again, just in the recap, we entered based upon this inside bar structure. I mentioned that to you in a recent update on this index. Since then, of course, we've had an aggressive break to the upside, breaking out of the high of the mother bar, which we were looking for. And on Friday, we can see here that price printed this inline bullish pin bar, which of course is good news for us. So there's nothing to report here, traders, just except for the fact that this is working out well for us right now. If you go to your 4 hourly time frame, as I mentioned in a recent update, you can see how price is acting with the two EMAs, the two moving averages, and the patterns that are forming in there. So right now, this is working out perfectly for us. Not quite an inside bar structure, but we do have a bullish inline pin bar. Once again, that's in our favor. So we'll just see how this plays out over the course of the trading week. Very short recap on the Aussie 200, but it's all working out fine, and we'll just see how it plays out. Trades, nothing to do, and it's just a wait and see game. But right now, 74 pips in profit. All the signs is that the dominant uptrend is set to continue. There are no signs of a turnaround in this uptrend anytime soon on any of the time frames. So it's just a matter of see how it plays out over the course of the trading week. Thanks, traders.